Hello, hello. Welcome to the Dinero Twins podcast. This is episode number 7. I hope everyone is having a marvelous day. Hey, twin.
Hi, twin. What's going on?
I'm
Well,
doing well. How are you?
I'm good. We're at it again.
At it again, guys. Make sure that if you haven't already done so, go back to our previous episodes. We dropped so many gems. And don't forget to subscribe, okay? Hit that subscribe button because you don't want to miss any other episode that we roll out.
That's right. Don't forget to subscribe. Every Wednesday, you know where we are, live and present here on YouTube and all of the audio platforms like Spotify and Apple. Episode 7.
Oh my God, today is going to be a great topic. We're going to be talking about how to use life insurance to build wealth. Okay. Very, very important topic. It's actually not spoken about enough. And we want to come here to use this platform to share these gems with you guys.
Yes. Listen, the topic of life insurance is one of those like taboo conversations no one's trying to have, especially in our Latino community, right? These are not conversations we want to have, right? Because we're like, life insurance, what do you mean? Like, that's like calling death. We should never talk about, planning for death. And it's like, well, if there's one thing for sure is that we are all going to not be here one day. So this is a conversation we need to have because there is definitely some strategies we can put in place to help our families and our, future generations start on a better path, financial path, by us just making the decision to get life insurance now.
Absolutely. And with that being said, I do want to, make a note by saying that Gofundme is not life insurance, guys. We need to stop it, okay? There's actual real life insurance that is a tool, is a vehicle that you use in the event of someone passes away. Then there is a death benefit that pays out to the family, the beneficiaries, whomever, right? Which is, getting ahead to the first question that we had, which is what is life insurance? Life insurance is a contract that you have with an insurance company, which the contract says that as long as you're making your monthly payments, your premiums, then I would make sure to pay a significant amount of money, which is called a death benefit, in the event of your passing or something happening to you, right? Life insurance isn't only for when you pass away. There's actually a lot of riders like long-term care, living benefits like terminal, critical, or chronic illness that you can also be covered for. So if you do suffer anything of that nature, the company will pay out a lump sum of the benefit upfront to you.
Wow, that's interesting because I didn't even know they had those choices. Like long-term care is definitely an important one because, as our, like right now, I have an elderly grandparents, right? So if we needed to get care or assistance for her, it's going to come out of our pockets as a family. So that's really good to know that there's actually that option in there as well.
Yeah, and it's crazy because if we actually look at the number just for long-term care alone, about 70% of people over the age of 65 are going to need long-term care services. Under the age of 65 is the other 30%. That means that we're all going to need long-term care services at some point of our life. It's just a matter of when. So
Right.
that's why it's important to have something like a long-term care attached to a life insurance policy, which comes out to be more affordable compared to just having a standalone long-term care policy.
Interesting. And I wanted to add, so just in case you guys don't know, my twin Lisa is a licensed life insurance professional, right? In New York.
Yes, I am licensed in about 19, 20 states now. I don't know. I just recently got my license for Indiana. So that's a new state that I'm able to service in. But yes, life insurance is a big portion of my business, along with other, financial categories like debt management. I also help people with retirement planning and even building a savings overall, just the whole holistic view when it comes to personal finance.
Loving it. What other states, Lisa? Because I missed that. I was like, I know it was New York, New Jersey. So
I literally have a spreadsheet because I can't. I know I have the tri-states, so Connecticut, New York, New Jersey, Pennsylvania, Massachusetts. I do have Rhode Island. I don't even know if I have Rhode Island, but I do have. Then if I get more into like, I have Florida, I have
Okay.
Delaware. Oh my God,
That's good enough, girl.
Texas, California. I mean, the list goes on and on.
That's amazing. Yeah. So we just wanted to mention that because for you listeners that are out there in other states, just know that, Lisa's definitely a great resource for
Yes.
getting these policies. Okay. So let's get into it. Let's get into these stats. I know you've shared a
Yes.
few of them with us.
Yes. So when it comes to life insurance ownership, especially in the US, we have about 102 million Americans that are currently uninsured or underinsured, which means they don't have enough life insurance. And the reason because of this is that most people that do have life insurance, they normally have life insurance through their job, right? And when you have life insurance through your job, you're normally just covered for about 1 or 2 years of your yearly salary, which in reality is not enough. Let's say you're making $50,000 a year, and you're only covered for, let's say, 2 years of your salary. That's 100,000. If something happens to you, 100,000 will go by like this, right? Especially if you have multiple kids and you want to divide it, or however. I mean, funeral expenses alone is about $15,000 to $20,000 on average, right? So you want to think about what is the outcome, or how do you want the people around you, in this case if you have kids, how do you want them to continue a life when you're no longer around, right? We're talking about college costs, we're talking about making sure they have enough for a down payment, and a lot of things, a lot of a very big concern that I get, especially from within our own communities, is that, well, how our kids are going to know how to manage this amount of money. This is why you want to have a will or a trust, where the trust would allow you to still be in control of this money even when you're no longer here. You can give them allowances. You can give them, hey, in order for you to get the $30,000 by the age of 18 or whatever, you need to make sure you complete a financial literacy course. Like you can decide
Right.
where you are literally are in control of the money, and you're, giving them little bits until they're responsible enough to be able to manage the entire money, because we know people are going to blow the money if they lack education, right? But this is why a will or a trust can also help you be in control of that when you're no longer around.
That's super important to know. Yeah, I've known plenty. The very few that I know that have gotten life insurance, girl, it's like year one, year two, there's no more money left, right?
Yeah.
And that's exactly why, because if whoever the beneficiaries are, if they don't know how to manage money, then you've gone through all this effort, right, to pay for a policy, to make sure that they're well taken care of, and then in a matter of 12 months, they're here blowing the money on things they don't need.
It's insane. And I think a lot of people think that sometimes more money is the answer, when in reality it's not. You have to learn how to manage the money you currently have. Because look at, for example, people that win the lotto.
Oh,
People
yeah.
win the lotto, in average, they go broken within a year or two. Because it's not more money that's the answer. It's about learning how to make more money, learning how to administrate it, how to, grow your money so your money is working for you. That's where the true education comes from. So, I mean, we can talk all day about this.
Yeah, we're passionate about this topic, so you can't get us to stop, right?
Exactly. Once you get us started, forget about it.
Forget about it. So talk to me about the different types of life insurance policies, because I know that I think a lot of people, including myself, only really know term, which is the one that, you pay it every month. By age 75, if you happen to pass away, then the amount goes to your beneficiaries, and that's that, right? But there's different types. So yeah, we can go through the rundown of, a couple of types, how they work, and this way I can ask you questions too, because I'm learning here.
Well, the two main types of life insurance that most people talk about is, yes, term, which is one of the oldest types of life insurances around. That's why most people have term policies. And then the other type of life insurance is a permanent, otherwise referred to as whole life insurance. Now, the difference between the two is like this. I like to make the reference to renting an apartment versus owning a home, right? When you rent an apartment, you're only renting it for the time that you're living there. So you're making your monthly payments, right? Or you're paying the rent month to month. And then when you move, it's not like you're going to go to your landlord and say, hey, I'm moving. Can I get all the money that I paid you throughout the years? Right?
Not
It
happening.
doesn't work that way. Right? You just, that's it. You're no longer going to live there. You move to a different state or to just a different apartment, or you buy a home, whatever. The same thing refers to term life insurance. Term life insurance is you renting life insurance. You only own it for a specific period of time. Okay. That time can be 10, 20, 30 years. And once that time is up, okay, which means that you're going to be paying the same monthly payments for that segment of time, 10, 20, 30 years. But then once the life insurance is coming to an end, you will be, or you might not be given the choice to renew it. What tends to happen in that case is that something that you thought was so affordable to start off with, because it is, I feel like term life insurance is the most affordable way to pass on generational wealth, because you can have a $30 a month life insurance that you have for $500,000, $1 million. And if something happens to you around that time period, your family is instantly a millionaire, right? However, if it's assuming that you're only going to live for a specific period of time.
Right.
We're living longer. I mean, science is proven. Someone that's born today has a life expectancy until the age of 120. That's why life insurance policies, like the permanent ones, the maturity date is 120. So you're covered all the way until 120 because of that, because someone born today has a life expectancy of 120. Of course, there's things that happen along their lives that maybe they don't get to see 120, but there's a possibility, right? So that means that if I'm 30 years old and I only get a 30-year term, I'll be 60. The likelihood, I mean, women right now are living to the age of 90, 95. We have a longer than men, which means that I still have about another 30 years. If I renew my term at the age of 60, I'm going to be paying easily for, let's say, $1 million, about $2,000 a month.
What?
Yes. And I'm being generous because there's possibility that is more.
That's crazy. Well, yeah, because now they're going to quote you a price based on your current age, which would be
your current age, your health. Right? So if you have diabetes or any type of chronic disease, now you probably won't even get insured at that time, right? So that's why I usually recommend people to lock yourself into something permanent. Of course, there is terms that you start off as term and then you have the ability to convert it into something permanent later on, because not everybody can afford something permanent off the start, right? You start off small, you work your way up. There's nothing wrong with that. But if you do have the possibility to do so, or the opportunity, lock yourself in with something permanent, because with permanent, even though it's, yes, a little bit more expensive than term, it's something that will last you for the rest of your life, one, and two, you're locked in. So you're locked in at that rate class, you're locked in, at a good rate class. So you don't have to worry about, getting older. And then if you get any other diseases along the way, you don't have to worry about your coverage increasing.
Right. So, and at that point too, like it avoids getting like medical exams and all of these other requirements because you're already locked in, right?
You're locked in, yes. And also another benefit about permanent life insurance, which is why I refer to owning a home. See, when you own a home, you build equity, right? The same thing applies to the permanent life insurance, whole life, universal life, all these different types. Do you also build equity, which is considered to be a cash value inside of this fund? So while you're paying your monthly premiums for the life insurance, guess what you're also doing? You're building this cash account, which you can then use later on for, I don't know, future investments, supplementing retirement fund or long-term care or whatever, kids college fund. I don't know. There's people that use this for things, right? Which is what makes it extremely valuable and attractive to a lot of people. And is why we're having this conversation.
Yes. Yes. Because then that cash value you can use, like you said, but it's also tax-free, right?
Absolutely.
Yes.
I mean, the good thing about life insurance, which is why I feel like a lot of people should have it, is because your death benefit is tax-free, which means that the coverage that you design, whether it's at 100,000, 500,000, $1 million, that death benefit is passed on to your beneficiaries tax-free. Okay. One. Now, the cash value, which is the account that's growing in a permanent life insurance policy, the money that's going into that account is after tax money. So now your money
Okay.
gets to go and accumulate, and then you're able to take out loans or withdraw that money in a tax-free way as well.
Amazing. Yeah. So again, guys, this is different strategies for different people, different income levels, right? Different age group, different needs. So like for me, I'll share that, for most of my life, because I worked for an employer before, I only knew about the life insurance policy that my job offered, which was a group term. What was it? Group term? Group term policy, right? That's what it's called. That's when your employer offers you, one times, two times your salary, and you pay, a couple of dollars a week out of your paycheck. So I didn't really ever stop to think about it. I'm just like, oh, I have life insurance through my job, but that's not enough, right? You still want to understand what that amount is, right? What happens if you get on disability, if you have to leave your job, if you get laid off? You no longer have those coverages. You don't no longer have those policies. And I think a lot of people forget about that, God forbid they get on workers' comp or disability or stop working altogether, those benefits usually stop, they get paused, or you don't have them at all in the case of leaving the job. So this is why you want to understand kind of all these other options for you to have more control over, because having a policy, on your own means that you signed up for it, you understand exactly what it includes, and as long as you make your monthly payments, you're good to go. So I had to switch from a group policy through my job. Now that I'm in full-time, business owner and investor, I had to get my own policy. So I pay for my own, every month. I have a term policy, but now that I'm learning a little more about whole life and more of a permanent option, that I'm definitely looking to switch over and kind of incorporate that into my overall wealth building plan, right? So I got 2 kids, I got parents, I got siblings, I got a husband, right? So now I got to make sure that whatever coverage I have, whatever money's going into that pot, that it can be used for something bigger than just me, pretty much.
Nice. Yes.
Yes.
And I'm so glad that you mentioned that because, I mean, let's think about the pandemic, for example. How many people lost their job during the pandemic, which means that for those people, let's say 50% of the people that were insured, because we have about 52% of Americans that are insured, but most of those people that are insured were through their jobs. Imagine how
Yeah.
many people that lost their jobs also lost their benefits because you don't
Right.
have control over it, right? Your employer has control. It's a policy that they have for all of the employees. But you don't have control of that policy. You never get a physical policy. You get
Right.
a certificate, but not a policy itself. So I always recommend people, if you have life insurance through your job, that's great. But I would recommend that you supplement it with your own policy where you have more control of. And if things change in your life, you can make those changes as you see fit.
Awesome. That's great advice. Yeah, for sure. Is there a difference? Well, I know that pricing depends on obviously the age, the plan, the health, right? Because some plans actually request that you have like a physical exam done.
Yes.
Um, so I was gonna say which of the plans are better, but
Mhm.
obviously it's gonna be depending on the individual, right?
Absolutely, absolutely. I mean, there's no real answer to which type of life insurance is best. It really has a lot to do with the individual. It has a lot to do with what their objectives are, what they're looking to accomplish on a short term, on a long term basis, what their health is, right? Because overall, life insurance, in order for you to qualify, you need to be you don't have to have a great health because I know people that don't have good health, but they
Hmm.
get some type of life insurance. But they look at that; it's a determining factor. They look at your
Yeah.
driving history, they look at criminal records. These are all the things that play a factor into you getting approved for life insurance. Ironically enough, during the pandemic, I thought that companies were going to be enforcing more medical exams. They actually did the opposite. So now we have
Mm.
applications that don't even require medical exams, and we're getting clients approved. I mean, I literally got submitted a case on Sunday, and in less than 24 hours, it was approved. Right? So
Wow.
yeah, I mean, we're seeing these policies being pushed more and more because they're updating their intelligence underwriting. So I mean, they're doing such an amazing job. I mean, these companies have a lot of money, so they invested into these resources to be able to, get people approved in little to no time.
Wow, that's really, really good to know. I thought they would have done the opposite, right?
I thought so
Like
too.
after this, they would have probably had to pay out so much money to all these, people that passed or their families. And I would have thought they would have been more strict. So that's good to know.
The good thing is that because, like I mentioned, they invest a lot of money into their underwriting field, which means that, I mean, they're on top of medical records, they're on top of,
Mm,
they check your driver's license, they check, they check everything. I mean, they make
wow.
sure that if we're gonna approve you, because we're not talking about a couple $1,000s, we're talking about hundreds of thousands of dollars, right?
Right.
Make sure that they do their due diligence, because if that person is a risk to a company, then they're gonna think twice about insuring you.
Yeah, 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 totally. Yeah. And I think now also with like AI, artificial intelligence, they have all
Yeah.
this technology that probably like runs all these numbers and all this data. And they're like, okay, this one has a X percentage risk rate, or this one is, good to go. So they can make a decision a little quicker. Yeah, that makes sense.
Yes. Awesome. But
Awesome.
yes,
Wow.
back to the question, it really has a lot to do with the person's objectives, their health, their lifestyle, right? I mean, somebody that, excuse me, like a parent that has, two, three kids, or more than that, right? They're not going to have the same perspective or the same objective as a single college student, right?
Right,
Their
right, right.
objectives are totally different and their needs are totally different, right? Because we're talking about, for that parent, they need to get life insurance that make sure that if they have a mortgage, covers the mortgage. Okay, so
Yeah.
they don't have a spouse with all that responsibility. Do you leave enough money for your kids to be able to go to college or even pay for their college, right? You make sure that you don't leave them with any debts. You got to cover also funeral expenses. So there's more things that you have to calculate into that coverage compared to a college student who just wants to make sure that their parents don't have to, you know, pay the loan in the event that something happens to them.
Yeah, yeah. Definitely makes sense. Yeah. So let's talk into the last point, which is how can you use a policy to build wealth? That's
Yes.
what
So
I want to know.
so when we're looking at life insurance as a wealth building tool, we're looking at it in so many different aspects. See, life insurance is not considered an investment. We can't even, in the industry, we can't consider life insurance an investment. Actually, I personally feel that it's considering it an investment, or an investment account, is an understatement. I feel like life insurance has the ability to do much more than that. But the reason why I say that is because there's different factors that we want to look at. For example, what is the growth potential? What is the risk involved?
Yeah.
Also, what are the tax advantages? And how am I protected? But not only how am I protected, how are the people around me also going to be protected? So those are the four factors that, when we're looking at life insurance as a wealth building tool, we look at it and through those four lenses. Now,
Okay.
break it down individually. When we talk about growth, we're thinking about, okay, how is it that my money can grow for me? See, an advantage about cash value life insurance, permanent, whole life, universal, whatever you want to call it, is that these policies have a way for you to grow your money inside of these policies. Now, there's
Okay.
different ways. You can either tie it into an index. You can have a basic interest rate that you'll get a guarantee rate of return somewhere between a 2 to 4%. Um, you can even tie it into the stock market. You can even,
Wow.
so there's different ways that you can allocate your fund so that your money grows accordingly. And you can always
Okay.
change that, right? Because, for example, everybody, and this is one of the things that I wanted to say, is that we all have different risk tolerance,
Yeah.
right? I feel like right now we're living in a day and age where, it's so easy to make money, through the crypto,
Hmm.
NFTs, the market. There's so many different tools to make money, but we all
Right.
have to keep in mind that we don't all have the same risk tolerance, right? You
Yes.
have a high risk tolerance, you can, put a lot of money in, there's a lot of risk involved. I may not be okay with the same amount of risk. what
Right.
what life insurance does is that it minimizes those risks. What it does is that it gives you a minimum floor. For example, Let me compare it to um, investing in the stock market. When you invest in the stock market, you know that there's high rewards, but there's also high risk because the market is volatile and we don't know what the market is going to perform. Now,
Yeah.
with life insurance, we know that I cannot make anything less than a floor, or I know that I'm going to get a guaranteed rate of return, which it's more predictable, which means that your money
Okay.
gets compound and you don't have to worry about losing any money.
Right.
That's
Right.
how we get our growth. That's how we minimize our risk. So there's more safety in it. And even if you get a minimum rate of return on, which is in some cases, let's say is a 0.75%, you're still getting more than what the banks will give you,
Yeah,
right?
exactly.
Because we
Yeah,
got to
yeah,
keep
yeah.
inflation, right? All of these things. Um, so now we have safety, we have growth, and then tax advantages, right? One of the things that I've noticed a lot in being in this industry and looking at people's financial profiles is that most times people fall in within two tax categories, which is what? Tax now and tax later, which means
Okay.
that what falls into the tax now category, we have stocks, we have mutual funds, we have CDs, savings, the list goes on and on. The tax deferred accounts, we have the 401ks, 403b, pension, annuities, all of these things, IRAs fall within the tax deferred account, which means that although I'm not paying tax on that money now, when it's time for me to retire, I have to pay those taxes.
Right.
I hope no one takes this as tax advice. I'm just
Yeah, yeah,
you guys, disclaimer, this is not investing
yeah.
or tax advice, it's just educational purposes. But one category that a lot of people fall short on is the tax advantage category, which is the category that allows you to pretty much put in tax later, or I'm sorry, put in after tax money, so your money can grow and accumulate tax free. And in
Free,
that
right.
category, that category has the cash value life insurance in that category, which is what makes it super advantageous to a lot of business owners, a lot of people that are trying to transfer a lot of money into the future, because you don't have to worry about taxes. See, taxes and
Right.
the two biggest things that eat up at your wealth. And a lot
Yes.
of business owners, a lot of entrepreneurs, we tend to be the people that are also most vulnerable, but we also are the ones that can use that to, or use those tax laws in our favor.
Absolutely.
And that's what the cash value life insurance allows you to do. On top of all of that, you're protected. If something happens to you, instant death benefit will get paid out to your family tax
Yeah.
free. So even with all of that, you still get to pass on generational wealth. I mean, hello.
It's a win all around.
Yes. It is all about just understanding that there is a vehicle like this, that life insurance is not just about death, that we should start looking at life insurance as a wealth building tool, because that's exactly what it is.
Right.
That's exactly what it is. That's what people, the Rockefellers, Ray Kroc, we're talking about of Disney, the creator
Walt Disney in
Walt Disney,
Spanish.
I
Yeah.
totally had a brain fart. I mean, these are all people that have used cash value life insurances to build their businesses, to help them in a time of need. And why can't we also do the same?
Yeah, and just to give you guys like a quick like in my mind, this is how I broke it down when I started to understand whole life, right? So you put $100 in the bucket every month, right? Your life insurance bill is I'm just gonna start with a simple number, $100 a month. $50 goes to your life insurance policy, right? That secures your death benefit for your family. The other 50 gets put into an account, like a stock account, an index account, something that grows in value over time. So obviously, the longer you have it, the more it grows. But that $50 that's in that investment wheel is the number that is going to continue to grow, that you'll be able to pull out 10 years from now, 20 years from now, while you're alive, right? While you're still here with us, you're going to pull it out with all that interest accumulated. You're going to pull it out tax free, and you're going to use it to invest in real estate or a business, or give it to your daughter, your son, start a business for them. But meanwhile, you still have that life insurance policy on the other side that protects you, right? So that's kind of like big picture, how it works?
Definitely have a great picture. I do want to mention, however, is that the money that's going into the cash value, your money is not being directly invested into the index, for example. What
Okay.
Tesla, and this is why you don't have, you're minimizing your risk, because the company is investing their money into the index, and then they're getting a rate of return based on its performance.
Okay, I got it.
You're not exposed to all the risk involved, like if you were to invest your money directly into the market. So
Makes sense.
it's the way that they've engineered these type of policies, especially because they've evolved, and I feel like they're getting better. We look at the tax code 7702. If anything, they actually increase the amount of money that you can put into these policies. I mean, of course, it has a lot to do with how they're designed. You know, you want to make sure that you're sitting down with somebody that knows how to design it, so you can use it for that purpose. But nevertheless, you want it, just the way that is engineered. It's just, I was like, I can't even put a word to it. It's just phenomenal.
That's amazing. Yeah, listen. So again, this is how you can use it to build wealth, right? It's just having that option to use it while you're still alive, so you have both sides covered. Definitely a great tool. I mean, I think I'm gonna have to sit my family down and be like, all right, guys, let's talk about this. Like, I know we're all gonna go at some point, right?
Yeah, it's true. Like, if there's anything that's certain in this world, is death and taxes. Like,
Death
we
and
all know we
taxes.
don't know when, and we all got to pay taxes. If you don't pay
Yep.
taxes on my business, I don't want to know. You know,
Exactly.
but hey, that's just life.
Yeah, and again, GoFundMe is not a life insurance policy. Let's make that very clear.
It's not, guys. Honestly, there's life insurance out there that will cost you less than a coffee a day. And I know people that drink coffee every single day, or they buy coffee every single day.
They buy Starbucks coffee.
Starbucks at that, which is $5 a day, you know? Like, you can get a life insurance for less than a cup of coffee a day.
Right. There you go, guys. That's how we're going to close it up. So definitely do your research if you have any more questions.
Yes, if you're also watching this and you want to get a free life insurance quote, I'm going to put the link in the description so you guys can go ahead and use that tool. If you have any other questions, feel free to reach out to us, you know, or any capacity of that is. And if you guys also have some insights or additional things you would like to add, also put it out in the comments as well.
Yes. Thank you, Twin. This was amazing. I learned so much.
I'm excited. I mean, this is a great conversation. We bringing out true education, financial literacy, and personal finance to our community. So this is why you guys have to subscribe if you haven't already done so. And please make sure that you're here every single Wednesday for a new episode.
Absolutely. You heard it. All right, guys. Thank you for joining us, and we'll talk to you again next week.
Thank you, guys. Ciao.
Adios.
Thanks for tuning in. We hope you found great value in the content shared. Make sure to tune in again every Wednesday and to also share our podcast link with anyone who can benefit from the information. Till next time, adios.